Happening, everybody? It's Curtis. Thanks for joining me. And today was a big day, right? Today we had the press conference with the new Federal Reserve Chairman, Warsh, right? First time ever that he has just shared with us during this press conference here. As you can tell right here on Yahoo Finance, more Fed officials see a rate hike ahead, and that's not looking too good because of that. The way that the market sees this whole thing. So, what does that mean for you, right? If you're a retail investor, you like to trade occasionally, maybe you're a day trader. Take a look at this right here, okay? After the Fed meeting press conference with Chairman Warsh, S&P 500 took a dip, okay? Dow Jones took a dip. NASDAQ took a dip. Big dips, all right? And if you take a look as well, okay, let's take a look at the rates here. We've got the 10-year bond at 4.463, okay, up 3 basis points. And as you can tell right here on this chart right here, it's jumping up there. So what that means for you is, there's obviously a sell-off in the market already. It happened right after the press conference. Now, let me give you a backdrop on what's going on here. We've got the Federal Reserve Economic Data, FRED, and this is how the federal funds effective rate looked like in the past. As you can tell, right? Pre-COVID, darn, take a look at that, right? It was at 0%, practically free money. And the pandemic happened. It shot all the way up there, right? We encountered all this inflation that we're still paying for each and every single day. Hoping to bring it back down to the interest or into the rate level that they want, which is 2.5. Started bringing it down in 2024, a little bit at a time. And if you take a look, right, there was a few rate cuts before the beginning of this year, and now they've just held it steady, okay, at 3.64-ish, 3.63-ish. After today's meeting, they're not going to do anything. They're going to hold steady, and that's exactly why. Everybody would like a rate cut so that our stocks would actually look better, right? So that our stock prices, the valuations would end up looking better, so that the borrowing costs would be better, and that way we can have a faster, more efficient moving economy. But at the end of the day, this is we're battling on different fronts, and inflation is a huge front that it's hard to deal with right now. But at the end of the day, okay, I just want to share, okay, my Kevin Warsh, after his first press conference, I thought he was mindful about what he wanted to discuss. That's his leadership style. That's how he wants to reform the Federal Reserve and how they present stuff to us. I saw him as being blunt, and he demonstrated how he wants to lead this new regime. Straight up. He was intentional about not providing any forward guidance, and I think the market hated that. Why? Because they want to hear about rate cuts, because, of course, he was brought in as a hand-picked person to be the chairman. Anyways, he did emphasize on having a modern approach to informed decision making. I can certainly relate to that. I feel like oftentimes, too often, we're stuck in this mode where, it used to work in the past, so let's not change it, right? But the world is changing so quickly. Decision making at a corporate level compared to the federal level is night and day, I bet. And I'm sure he saw that, and he saw that it needed to change to be more effective for government. Okay. Next up, there was the standard investor playbook that came into play, right? Pricing in uncertainty, swinging hard after meetings like this. And I think that's why Chairman Warsh didn't want to, he didn't want to have our economy run based off of those type of news. And that's why, to prevent that type of volatility, he doesn't want to provide forward guidance and have it based off of what the Federal Reserve is going to announce to everybody. Because at the end of the day, all the targets, all the investor analysts, they use all this data. I mean, in my opinion, maybe a little bit more on the heavy side compared to the reality of a business. Going back to how Charlie Munger would say, "Hey, buy wonderful companies at a fair price." It's far better than buying a fair company at a great price. So if you think about it, the way we should play this, in my opinion, right? Not financial advice, but in my opinion, is hey, avoid speculation and stupidity. Okay, play this with patience and use a little bit of your wisdom with your great temperament. All right, now let's go ahead and play a quick video on what Kevin Warsh had to say. And here we go. Check this out.
Opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy.
There we go. Right, reform, and that was, to me, that's the tone, that's the theme, and that's the one thing, that one basic with markets, right? They hate changes. I mean, they want stability. Of course, that's what ironically, that's what Kevin Warsh is seeking, right? Price stability and stuff like that. But at the end of the day, I mean, the market hates that reform, right? So they just want rate cuts. Anyways, let me tell you my dovish take on Kevin Warsh, at least, okay? So at the end of the day, keep in mind, okay, he was handpicked to be the chairman to cut rates. That hasn't changed, okay? And as long as you know who this current administration's here, that's not going to change, okay? There's going to be pressure on that side. Kevin Warsh knows he's here to do that job, all right? Now, they talked about, the 18th vote, and he had the 19th vote, and he didn't, he wasn't going to, share his SEP forecast. At the end of the day, right, he's not going to try to give the market anything to base where they're moving at right now, right? He wants them to base it off of how the market is actually productive, performing on its own. On top of that, speaking of being productive, they brought up they brought up AI. I mean, obviously, he thinks he's bullish on AI, and he thinks that the AI productivity will probably, outpace inflation at this point. So there's another angle to that as well. I'm just saying this out of speculation, my thought and my view on this, my perception. Okay, now it's still certainly too early to tell what Warsh is gonna do. Okay, he is still putting on a show. It's his first meeting. Okay, just think about us at work, right? The first day at work, or our first meeting. Okay, how are we acting? Right, we're born to act. Okay, that's the first thing you got to keep in mind, is that it's Kevin Warsh's first press meeting after after this whole Federal Reserve meeting, and he's gonna act tough right now, but at the end of the day, right, I mean, again, the key thing long term is that this administration wants rates to be cut. So that's my take on it. Okay. Now, let's take a look right here, okay? Says it right here on the headline, Wall Street Journal, okay? The Fed holds rates steady, but more officials see higher rates as the next move. Of course, the voters, as I had mentioned, right, 9 of them, are assuming that there's going to be a rate hike sometime at the end of this year. Of course, as mentioned before, Kevin had a so-called tiebreaker vote. Not exactly, but, I mean, he's not going to give us any guidance based off of all that, right? He's smarter than that, and he seems like a pretty sharp guy. That's why he's there doing the job, and we're here to watch and do our part, which is, at the end of the day, to make wise decisions when you're making your own investment moves. Again, right? Patience, buy a quality business, and be mindful about not doing anything stupid. Charlie Munger would say that. All right? So I'm going to read this right here for you all real quick. The Fed held its benchmark rate steady in a range of 3.5 to 3.75 in a unanimous vote, but officials' quarterly economic projections told the story of the shift. 9 of the 19 officials penciled in at least one rate increase by year's end, up from none in March. Just one foresaw a cut down out of those 12, right? So there's certainly a bearish take from the market right now. Nobody's liking that. And, hence, the treasury yields are moving up. And then, of course, the U.S. market futures are, come on, show it to me. Okay. U.S. futures, market futures are down and pretty hard. Okay. And, I did pull up this last article, but you know what? I'm going to just lightly touch on it. This is Wall Street Journal as well, just telling us about how the Treasury yields rise on hawkish new Fed. Again, you know what? I mean, I think there's too much of this propaganda on the Fed being hawkish or whatever. I mean, we don't know yet. That's my opinion. I think Kevin Warsh will actually, I mean, he's still, at the forefront of his mind is to, cut rates. And so I think that he's more dovish than people take him for. And I think that's also one reason why he's playing it out the way that he is right now, right? The thing is, if you think about it, okay? Forward guidance from the previous Federal Reserve regimes, that was a dovish tool for the market. Okay, they counted on it. Okay, they wanted the Fed to say, "Hey, we expect to keep rates low until an X amount of time." That way, like, they can drop it into their evaluations and buy, all these, growth stocks or whatever. You got to keep it that in that way, right? And then secondly, okay, when Kevin Warsh talks about being data dependent. Now that already sounds hawkish, right? When you're keeping your eyes on numbers, whatever. It's the market's taking it as we clearly need to see inflation falling before cutting. That's how they're looking at it, at least, in my opinion. And then if you think about historically, right, when central banks shift from being guidance heavy and sharing everything that they're going to do to a more opaque and data driven mindset, I mean, that typically leads to the market thinking, it's not going to be that easy of a easy policy type Federal Reserve nowadays, especially with Warsh in. But again, like I said, right, think about it. This administration put them there for a reason, okay? And then lastly, I just want to wrap this up by saying that, you know what, the current backdrop amplifies everything right now, and that's why all the market's uncomfortable, right? We got the sticky inflation. Inflation is not going playing a smart game, mindful about your trades, right? And at the end of the day, don't do anything stupid. I mean, if it drops a little bit, hang on to it, right? Have that strong temperament where, think about it. An investor, what they want is their investment back. Okay, so you can hang on to it even if it drops 20, 30, 40%. Okay, and things will get better. After what goes down will essentially come up. If you're invested in a quality, good company, right? Going back to the whole, hey, buy a wonderful company at a fair price, not the other way around. So, that's all I got for you guys. Hey, good luck. I just wanted to be informative with what happened during the Fed press meeting with Kevin Warsh. Again, I think you know what? I think he has something up under his sleeve that other folks are not, they're not along in the ride with. Okay, so anyways, thank you for watching so much. You ain't got to subscribe to me. Don't even press that thumbs up button. But hey, if you want to watch something to do with stocks next time around, check out my videos, okay? My name's Curtis. Thank you so much for watching, and get a great day.